Hello and welcome to another update video about Natgas. We are heading into a new trading week and the overall scenario on the Natgas chart has been unchanged for many months. Since April basically. We've been tracking here this ABC structure, have been expecting higher prices. They happened even though in slow motion. And now we are at a key decision point as I explained last week. We have got, for the first time in those few months now, we have the scenario that this ABC structure could technically be complete. I still find it a little bit too shallow, this C wave, and I would like it to go higher. However, we need to be aware that, and I highlighted that already last week, and I think the week before, that this ABC structure could technically be complete. And in this C wave here, we have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Not ideal, okay, not ideal, not happy with it, but it is technically possible. We have 5 waves in the C wave. We have also reached, in this blue C wave, the 100% extension level of the A wave. Here that was at $3, where the price got rejected in August. So that's a key level. Formed basically here, a local top at that 100% extension level. That is typically the ideal level for a C wave. Nevertheless, it is still a bit too short, still a little bit too shallow, not time-wise, but from a retracement point of view, I would like to see a deeper wave 4. Now, again, you can never rule out. There are 2 ways of correcting. I mean, a wave 4 is a corrective wave. It basically corrects this entire move to the downside, and it's possible to correct over price, which is what happened here, or over time. And of course, it's a bit of a mixture, right? But this could be that this wave here just corrected over time. And the wave 4 is oftentimes a sideways correction. So I don't want to make the case yet that the top is in, but I've highlighted throughout the last week that the potential exists, and that we have moved into our resistance area, and that a rejection from there is likely, and that if a rejection occurs and the price drops far enough after that, the top could be in. But it's now early days. I mean, we have a nice reaction, to the resistance area. That's why we had resistance on the chart. And we also broke to the downside of the price channel, and we've reached the next support, which is the trend line. All of that highlighted in the last videos. Now, I'm going to add to the chart a bearish scenario due to it is anyway a bearish scenario, because the expectation is that even after we go a little higher, which is still expected, we should see another bear market low. Alternatively, we could get that bear market low, of course, more directly. But for that, to confirm that, I need to see a break out of the price channel to the downside, and a test of the $2.14 level, this swing low, and a break. And as soon as 2.14 breaks, I will consider the top in place. It is very hard to say before, but I will possibly make it primary scenario already when we break out of the channel to the downside. What would be the more directly bearish wave count? Well, basically here, as I said, 5 waves down, could then be a wave 1, a corrective move into resistance in a wave 2, and then we could move down more directly like this over the coming weeks and months. Target for this third wave would be, so we take the length of the wave 1 in yellow, go to the high of the wave 2, and we talk about $1.90 as a minimum expectation for the yellow third wave. But for now, it's too early. This could still be part of that C wave rally, which is what I'm primarily assuming right now, okay? But of course, if the channel breaks to the downside, we have to expect a more direct path down. I mean, essentially, we're still waiting for that anyway. It's just that we expected it to be a little bit delayed. So nevertheless, it is expected in both scenarios. And the $2.14 level will be confirmation, and the break below the lower boundary line of the trend channel will be a good indication for that. This is at the moment what is going on here. Obviously, what we need to watch out for. Here, obviously, we've got micro support, this trend line. If that breaks, it would be, again, another very early indication that the top might be in. How can we avoid it? How can the bulls turn it around again? Well, the bulls can only turn it around again if we finally break above last week's high, break above resistance, and reach the $3.15 level next. But essentially, the market is just doing here what I highlighted to you, right? Said to you many times, we're in an ending diagonal, expect a lot of choppy price action, unexpected setbacks, and headwinds. Whereas even though this isn't even unexpected, we highlighted there is resistance, and a rejection here, even if it's only temporary, is highly likely. So hopefully all the levels for this week are clear. Let me know if you have any questions. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.